Most Florida real estate investors, homeowners, are looking at insurance here in Florida like it's a big headache. But is the reporting correct? We're seeing a lot of discrepancies in what's actually being reported and what the actuals are. It's starting to affect details across the state. Sometimes it's warranted, but I'm going to break down some actual data from the last few years so you can see what's changed, what's being absolutely and totally inflated and blown out of proportion by the media, and how you can actually really look at the numbers for equity, cash flow, and a wise investment. So, quick story. Last year, my wife and I went up to see very good friends who run a large real estate investing group in Toronto, Canada. Had a great time, got to get on stage with about 1,000 investors. And when we were up there, the day before I was speaking, we were in a beautiful coffee shop. My wife and I love to get coffee together when we're traveling on the road, especially. And we had a great conversation with the barista. Now, it was freezing cold up there in October, like it normally is. And I like to do my Florida jokes. And we were talking with her. And she said, gosh, someday my husband and I would love to live in Florida part-time. The only problem is I know it's impossible to get insurance on property in Florida now today. And my wife and I looked at each other because we own a number of investment properties ourselves. So I'm in the insurance markets daily with all of our build projects and getting insurance on them. And we asked her to explain more. And she started to say in the news reporting that they had seen in Canada and from Toronto coming down, there are a ton of people buying either investment properties or second homes to get out of the cold, come down, enjoy Florida. And she was saying there had been news reports, both in written and in news video, that said you just cannot get insurance in Florida anymore. And that really started to confuse me. And I started to dig in some actuals that I'm going to go over. The first thing that I was told that day was that all of the major insurance carriers in Florida over the last 5 years have pulled out. Well, let's look at that. So after hearing this claim, I decided to do a little bit of research to see, because I've heard the same rumblings too, that all the major insurance companies have pulled out of Florida over the last 5 years. So what I did is I decided to look up what the major carriers were 5 years ago and what they are today. So the list I came up with, I have right here in front of me: Citizens, Universal, State Farm, Tower Hill Insurance, ASI, USAA, Florida Peninsula Heritage Insurance, and Security First. These were the major insurance carriers for Florida property insurance. Fast forwarding 5 years later, from all the rumblings that I had felt, and again, I only work with about 2 insurance companies that have done really well for myself, my building operations, and our investors, but I wanted to look them all up. Looking forward 5 years from, again, starting in 2020 through 2025, every single one of those insurance carriers were still active in Florida. Not one of them, all the people I named, again, Citizens, Universal, State Farm, Tower Hill, ASI, USAA, Florida Peninsula, Heritage Insurance, and Security First, all were still active in Florida, which again tells me sometimes sensationalism will get in the way of actual. And so for proof in the pudding, we found that all of the major carriers that were in Florida insurance 5 years ago are still here today. Now, let's look at actual jumps in cost. Now, there is no getting around that Florida insurance has gone up quite substantially as a whole. A lot of that reaction came from the 2 hurricanes in Southwest Florida that raised the entire state's vulnerability and the exposure for insurance companies. So they're going to reassess and assign different markers to each property of risk. That's something that insurance companies are absolute experts at. They analyze risk all day long, and that's how they determine their pricing. So in years like 22 to 23, after the big hurricane hit in Southwest Florida, insurance rates went up sometimes 30 to 40%. 30 to 40%, that's undeniable. That's a lot to work off of at first until you dig under the numbers. And this was something that I learned years ago. So when you look at certain properties that were already before all of these hurricanes happened, let's say they're very close to the coast, or they were much older properties with deferred condition to them, insurance companies would start their premiums off, their monthly premiums would be very high, either risk of flooding from the ocean, or they're in a little bit more of disrepair or older properties on low-lying ground. Insurance companies, again, are all about risk, so those could have an assessment of 5 to 7 times more than a house that's even larger or nicer, depending on the risk or on its location. Again, a house that's 5 miles inland from the coast, that could be, let's say, 3,000 square feet, could have an insurance one third of the price of one that's, 100 feet from the ocean. And that makes a big difference of where those starting amounts were. So to give you exact examples, since we do new construction, about 5 years ago on a single family home in Central Florida, where we're still doing a lot of our building operations, the average monthly cost for insurance for full coverage was about $55 a month. $55 a month for full insurance on those properties. Fast forward to today, looking at all of our numbers and the insurance quotes we're still actively getting, that average insurance premium monthly is $72 a month. So when you do the math, that extra $17, that's actually a 31% increase in our insurance over the last couple of years. However, when you back down and see that you started at a low amount and then you went up $17, which means you'd be spending an extra $206 a month in insurance, you start to question again the narratives of Florida insurance is so out of control and so unaffordable. This is where segmentation is extremely important. If you're working with large properties right on the coast, insurance was probably already high before all these issues over the last few years. And starting high and then with those jumps, it's going to accentuate and give even higher premiums and, yes, maybe price you out of the market. Or with older homes like I used to, before I was a new builder, I used to rehab a lot of older homes in more marginal areas. And that held higher insurance premiums because these homes were older, they weren't as well built. There was deferred maintenance things you couldn't see, from sewer main lines to other things. And the insurance companies would look at these as a higher risk and show a higher premium. In fact, some of those that were, maybe a quarter of the size rental properties of my normal home that I lived in, they would have higher insurance premiums than my actual primary residence, which I always thought funny because I'm right next to the ocean and the house was much larger, but it was in newer condition, a much newer build, and they saw it as a lower risk assessment. Again, condition is key, location is key. And again, for Florida, what is the level the ground was built on? If you were built at 2 or 3 feet above sea level only, you are prone to flooding. Today's laws, since 2004, you have to build 13 to 14 feet above sea level when you're building a property. That takes a lot of risk out, and insurance companies underwrite for that. So remember, if you're going to look at costs and costs rising, you have to see what the percentages actually mean, the underlying. Going from $55 to $72, that's $17, 31%. Again, $206 a year, additional increase in insurance, still kept the numbers for our new construction properties in a very healthy line, cash flowing and putting people in a good position. Now, older properties that I used to do when they were, again, built in 1945 and on low-lying ground, and there's certain things that insurance companies were concerned about that they couldn't see, well, I would get premiums sometimes 5-7 times higher than what I'm telling you now on our new construction, and that's something you have to look at. So when you're looking at properties in Florida, go underneath the hood. Don't just look at a percentage that's shown to you by the media for shock value. See how much that number actually is for each individual property that you're looking at, and know certain properties are going to have a higher amount of this increase than others. So tying back to my friend, the barista in Toronto at the coffee shop with my wife and I gave those exact numbers of showing, yes, there can be an increase of 30 to 40%, but if it starts at a very low number already, then that impact can be very minimal and very easy to absorb on a good property. On other types of properties, absolutely, you have to look and compare, because if it already started high, that 30 to 40% really can be detrimental. Every property is different. You have to look at it differently. So reporting current or reporting history, this is something that you have to dissect. Again, 2022 to 2023, huge jumps, 30 to 40%. If you already had higher premiums, that could be very detrimental. But you have to look at what's current. In fact, by all the statistics that are being shared, and if you look them up, we're looking at about a 1.7% increase across the boards estimated for Florida insurance this year coming up. That's a very controllable, easy to absorb number. The problem that we're seeing is, again, media outlets that are still reporting to you that, oh man, everyone's pulled out of Florida insurance. You can't get insurance in Florida anymore. Florida insurance is going up 30 to 40% a year. I'm sure a lot of you have heard that. Well, they're putting that segment of 2022 to 2023 on today's plate. And I am all about being prudent and being conservative in your numbers, but to actually take media slop that is not actually accurate and just put it down on today's numbers, you are not being the best investor you can be. And it's also not giving you a true pro forma when you're overestimating something like that. So you have to look current, not at what happened a few years ago. So how do you work through all of the hype and to get to real numbers? What's some things that you can do? Well, first of all, you have to look at the individual properties. To look at Florida property insurance is such a blanketed statement that doesn't look at the property you may be looking at to buy or build or invest in. It also doesn't help you with what may have happened years past. Of course, you should look at history trends, but if you want to be accurate, you also have to look at what the actuals are today. The best way that I know is to really work through the insurance media frenzy. Again, you know, certain summers, they're going to only talk about shark attacks. Right now, they like to just talk about Florida insurance. Absolutely good reasons because of those sudden rises back 3 years ago. But today, the story has kind of run stale. It's run dry. It's not accurate. And if it's holding you from building or investing prematurely, that's not being a prudent investor. So how do you get around that? Be an individualized investor. When you are looking to invest or build something, look at that specific property, that specific area, and get specific numbers from the insurance carriers. Again, the insurance carriers, all the major ones, still here from 5 years ago. Some of them are not going to be your best quotes, but that's why I always shop around. Now at the point we're at, we have really one and a backup one that we go to because they continually like the product that we build. They get us great rates, and they are giving us really accurate data of what's going on, what types of claims are coming in, where they're coming from, and the types of properties that they like to insure based on the premium pricing, and we get full insurance. So I like to go right to the horse's mouth. I like to interview different insurance companies, find the ones that want to work with my type of property, and then try to work with them. Actual numbers. I don't care what the news or the media are saying because they don't give me the insurance. It's the insurance company that gives me the insurance. And although I've had issues at times with insurance companies, they will give you the actual quote. And if you agree to it, then you've done your homework. And again, some of the properties, whether you like it or not, are not going to be within favoritism. You may own some property that's older and lower lying right next to the beach. I don't have much I can tell to help you right now. The only thing I can say is you might have to wait it out. There was a famous saying, I don't remember who it was, but it might have been Trump said, look, the market has a 5-year memory. And normally, and we're going now into a cycle down where there hasn't been any big insurance problems for the last 2 years with hurricanes or such. The market has a 5-year memory. That means trending down should continue to happen. And hopefully those high rates you have, you can start to get out of. But if you're already there, there's not much I can do to help you. For you people that are just getting into a new property, well, you can avoid low lying. You can avoid right next to the beach. You can look at properties that are built 2004 or newer on higher ground and further away from the beach. That's one of the easiest cross sections and paths that I know to help you avoid what is taking on most of the brunt. That's one thing I'll agree with the media. They are saying, gosh, properties that are older or right next to the coast are taking a large hit in insurance increased premiums. That's true. So as a builder investor, I would suggest that you might try to avoid those two things, buying an older home that's low lying with lots of deferred maintenance, or even if you're building, if you have your numbers right, sure, the coast is beautiful. Some of the most expensive property in the world is coastal. I live about 100 feet off the beach myself, but I do pay an insurance premium to do so. And as a builder investor, is that what you want to do with your money, your time, your efforts, and your risk assessment? The same risk assessment your insurance company is going to look at. So again, you may want to disqualify if you're so concerned about insurance eating up all your cash flow or your holding power, then I would avoid certain properties that they're just not underwriting for a good price right now. and look at ones that are. So sensational media should not be your underwriting tool. It should not be your pro forma. It should not be your stop or go decision maker. There was plenty of times where the media has told me, oh man, 2005, this is the best time ever to get into real estate. Well, that was the worst time, which led into the 2008 meltdown. There's other times in 2009, I remember the media saying, oh my gosh, real estate is dead. It's never coming back. That was the best time probably in the last century to ever buy real estate, and I'm glad I didn't listen to them. Same thing happens here. Sensational media should never be your underwriter. It should never be your pro forma. For insurance, make sure you get the actual stats on the property you're looking to build, the property you're looking to invest in, talk to an expert, interview a few different insurance companies, or if you want information on that, reach out to us. We've really done a good job vetting our insurance companies, and our property counselors are happy to talk to you on that. But as an investor or a builder, don't let the media sensationalize you out of making sensible choices to continue to build your portfolio or build properties. Listen to the actual numbers. It can make a huge difference. Don't listen to the headlines.